get this recorded. All right, cool. We're recording. Perfect.
Hold on. Give me like 2 seconds.
Cool. This real quick.
All right, bet.
Everybody ready?
Yes, sir.
All righty. All right, so we're gonna start with indices because, to be honest, they've been moving really hectic these last few weeks. So, looking at US 30, from this let's go to the 4 hour real quick. So we see we are in this overall uptrend here. We are creating structure, and then throughout here, we actually had a double bottom at this level here, as we can see. If we go in a little bit more, we can see I do have my liquidity zones already marked from the previous week. Again, I don't know if you guys were in the last Zoom meeting, but I did say with liquidity zones, since we do mark them on high levels of liquidity, usually in and throughout the week, you're not going to have to remark them unless we do trade outside of these zones that we do have marked up. You normally won't have to remark them just because, again, they're liquidity zones and that's what we're holding in the market. Those are reversal places in the market. So from the 4 hour standpoint, we see our top liquidity zone. Again, all this is meaning is this is where price action has accumulated multiple times. I don't count the wicks because, again, that's just market manipulation. And so I usually go off of the bodies because that's where price is holding. Again, we can see here price holds or dropping, price is holding at this zone, price is holding before coming up, just mitigating, again, this wick. And that's why we don't count the wick, because all price did was come up and mitigate that before dropping off again. And same with this. So we see our bottom liquidity zone as well. And then throughout these zones here, we see a couple order blocks being formed. We can see an order block being formed right here. We can also see another order block being formed here. And I wouldn't count this as an order block, but potentially this could be this little push up. Although we see this, we can see the chart now. We are ranging. So we've been ranging in this zone for, let's see, for 17 days. So we've been kind of in these two liquidity zones for about 17 days now. So we're not really pushing up, pushing down. We're kind of just trading in between here. So as of right now, my bias is just trading in between these zones. So if we drop down to a lower time frame, we can go to the 1 hour real quick. We can see structure holding a little bit more. As we can see, we are respecting them even more on a lower time frame, which is valid here. If we do pull this liquidity zone out some more, you will see that it hits these zones over to the left. So we're coming right through these same zones, again, bouncing off of this liquidity that we played off of before actually getting into this range. So US 30 bias for this week, I can see us maybe pushing up. As we can see here, we are starting to break a downward structure. So we did come and we held our zone once again of liquidity. We had this push down, as we can see right here. We had this push down in the market before coming back up. But again, we are creating lower structure, as we can see throughout these areas. So I think that US 30 might be ready to kind of push towards the downside. I can see on this 1 hour time frame, if we zoom in a little bit, we can see right here that this order block, we actually did have an order block form over here in the market. And again, this is a 1 hour time frame. So 1 hour time frame order blocks are always going to hold more than smaller time frames like the 5 minute, 15 minute. Higher time frame order blocks always hold more. And you will continuously hear me say that because, again, if you can get an order block on the 1 hour, you're a lot better trading off of those order blocks than you are trading off of a 5 minute order block, because, again, those are more prone to fake outs and market manipulation. So as you can see, again, here we have this order block formed. I can see, since we are creating lower structure here, I can see us maybe pushing up a little bit more, maybe mitigating this area up here because we did have a little bit of accumulation here with price action. This doesn't really mean that much. It just means that right here, price action, especially before the market closed on Friday, we had this little bit of accumulation that created this lower structure, which is showing me that this week we could potentially be seeing this push down. And if we do, I see it coming first target being 50% of this order block here, just because that is where market structure is actually holding. So with US 30, we can kind of wait till Monday, Tuesday to kind of trade it. I don't really like trading it much on Mondays because Tuesday the market does move a lot better, but I do see it maybe pushing up a little bit more, just mitigating these areas of liquidity in and throughout these areas before actually making this push down to the downside, mitigating these order blocks and even maybe coming even lower to mitigate zones of 3,400, because again, that's a key level on US 30. So throw this here. So again, first target would be this order block formed on the 1 hour. And then if we do see a continuous push down, again, if we drop like this on US 30, we're going to get a retracement. That's just how US 30 moves. So if you miss this, again, we do have potentials to take it back down, or we could see it take this order block out completely and just continue back to the upside. But again, we're going to react to kind of what price does this week. But yeah, there's the US.
So your bias kind of just matches mine. Your target is just in like a higher place because you see that it's held at that first order block more, then that's why you feel like it'll come to there instead of pushing all the way down to fill those imbalances down there.
So the thing is, we could fill these imbalances down here, but again, we never know what the market is going to do. We're kind of always predicting. So with us predicting, I would rather take the safer bet. And if we get this push up here, let's just go from a risk to reward standpoint, right? So let's say we get 50% push here, which is kind of the area. We could, of course, take out price over here before dropping, or we could push up. Again, price can do whatever it wants to do. But I'm kind of predicting that we take this accumulation zone, given that we are pushing lower in price. Here, let me do this real quick. Cool. So we have this accumulation zone right here. So let's just say we take the sell off of the accumulation, and we're targeting our stop loss right below structure here on the wick, and then we're targeting 50%. So this is a 1 to 3 here. So with this 1 to 3, again, this is an indice. So instead of targeting all the way down here, given that we are very volatile, I would rather target here, have my position be completely taken out, look for a retrace back again up to these areas, filling the imbalance, because if we do get a huge drop, we will have imbalance up top. So further filling that before we do see a push down, rather than just targeting the 1 to 6 on an indice, because again, it is very volatile and it can move however which way. So there is
so are you more likely to since this is a 1 hour markup on the indice, you're not trying to like go down to a lower time frame and potentially take an entry from the lower time frame?
So we will take the entry off of the lower time frame. I look at it, so I'm just looking at it from the 1 hour standpoint again, because we do see higher price action. So if we push up to zone here on a 1 hour time frame before dropping, we're a lot more susceptible, let's say, to dropping, rather than if we drop to a 5 minute, right? A 5 minute right here, you see all of this price action. Of course, you could mark your UTAD, your Wyckoff schematic off of this, but I would rather stay on the higher time frames, given 45 minutes, an hour, looking for price action to actually come up here and close at these zones, showing me that price actually wants to push down, or if we do want to see price push up.
That you just made my US 30 markup seem 10 times more. I thought I just pulled that shit out my ass, no cap.
But yeah, of course, you do see the valid market structure happening in and throughout here.
Get it out.
So next pair,
I can just pull it out.
as
One, extend the rod against both arms at an angle. Twist to left.
Okay, cool. All right, so next markup we have is NAS. We go to the 4-hour perspective on NAS. So we do see that NAS is in this overall uptrend as of right now. This was all the way back in May when we started this uptrend. We have pushed up and we had some accumulation in and throughout this area before pushing down a little bit and then completely taking that out. Given where we're going to NAS, again, we have broken out of these zones. I can take off that zone if we want to, but I'm just gonna leave it on there just because, again, this is a key area. And if we do want to push back down through here, we understand that that zone can be taken out if we do want to push back down this week. But NAS is looking like this full-on uptrend. So what we can do here on the 4-hour perspective, actually, I'm going to drop to a 1 hour. So we do see that this is a liquidity zone, but I'm going to go ahead and drop to a 1 hour just to see if I can get a better markup of it. Drop this 1 hour real quick. Right,
So quick question. As you see NAS pushing up a whole lot, and you
Yes.
see how it's leaving all of those imbalances.
yes.
Like, do you feel like it might come back down to clear clear those, or do you think it's just gonna keep going on this uptrend?
So
'Cause
here's
this
the thing
uptrend is
with
pretty
that.
strong.
So indexes and forex pairs, they trade a little bit differently. So with forex pairs, your imbalances, of course, you're going to take out your imbalances, you're going to move up and down in the market, and that's kind of just how forex pairs move. With indices, they're a lot more volatile. So as we can see here, again, this was on May 19th when we started this original push up. So with this original push up on May 19th, we can see we never came back to take out any of this order block, anything in and around these zones. We didn't come back and take that out. Okay, cool. All right. So we did see that we had this major push up, and we never came back to take out this. Again, we have an order block formed here. As we can see, this is a 4-hour order block. So it holds a lot more than what a 5-minute, 15-minute would hold. But we do see that once price rallied and took off, we never came back and touched these zones. So with NAS and things like that, you're going to get huge pushes, huge upwards pushes, and huge downward pushes before taking out the imbalance. So with this, I can't really see NAS coming back and trading into like 13,400 as of right now, given that we are making this full bullish momentum push. And given that after this price accumulation, we came back to take some of the imbalance to the left before pushing price to higher zones.
So you'd have to see like a break of structure to the downward before you even consider selling NAS.
Exactly. So given that, again, this is a huge liquidity zone, as we can see, as price action has played in and around this zone multiple times. This is a huge liquidity zone, and this is a 4-hour time frame. On this 4-hour time frame, we see there's a whole bunch of, this is just consolidation all in and throughout these areas. But again, that consolidation has played with this zone. We didn't break below this zone. We're not taking it out. All we're doing, we've wicked out of this zone. But again, wicks don't necessarily matter when we're talking about price action because it's where the body's closed. So we see that we're playing on top of this zone, and then we have this huge rally up towards the end of last week. And again, this is a 4-hour perspective. So with this rally up, I don't really see price action coming back down here. In order for me to look at NAS sells, I would have to see market actually come back down and break our liquidity zone, showing me that we are moving to the bearish side.
But can you see like short-term scalps towards where you got that line at 13,834?
Yeah, so this is
pot.
So 13,834, I had this line. So this is where I was looking for the break of structure last week just for this upwards push. So I wasn't trading NAS last week, but I was looking for the analysis for us to push up because again, as we saw on this 1-hour time frame, on the 4-hour time frame, we are holding this zone extremely well. So I drew this 13,834 because again, as we can see right here, this is the top of structure here. So once we broke the structure, I knew, all right, if we're breaking structure here, as we've traded already into our liquidity zone, taking out price action previously, because if we do just draw a break of structure line here, we completely broke structure, taking liquidity here before rallying up. So I knew if we take out this zone here, that we've already had price accumulation, price come down, price came back up, touching the imbalance level. If we break this, we do see this uptrend, which is exactly what happened. We broke that zone and instantly took off and would have been in the profit if we would have taken that trade. But yes, I understand exactly what you're saying. There is, of course, possibilities to take this to the downside. You could be trying to take scalps, saying, okay, you see this imbalance here. Here, even better. Let's do it like this. So we do see this zone here. If we just mark up our imbalance for this zone right here, then we can delete this. You could be taking scalps. Hold on. So you could be trying to look for scalps maybe down into this zone. You could be trying to look for scalps. If we're breaking this zone, we can maybe retest coming back down to test our liquidity before taking off again. But as an overall perspective, I do see NAS actually in this uptrend. And as we haven't opened the market since it is Sunday and we just opened, seeing this price action to the top, this is our highest point that NAS has reached. So we do look to be trying to come and take out this high point. And once we get to this high point, again, we could see just what has happened in past price action. We touch our high and then we instantly start to come back down. And that's where we can maybe see NAS reverse to the downside. But as of right now, I see it at least coming up to touch these previous highs. So there is your NAS analysis for this week.
So, all right, on the scalping perspective, do you think, so if NAS comes up and touches those highs and I scale down to like a 3-minute or a 1-minute chart and I start to see like valid breaks of structure, then would it be possible to catch like sales toward the downside to potentially catch it back up from
if
that?
we pull here and all right, so let me just, if we hit this liquidity zone here and we see any sort of rejection, I'm looking at the 15. If we hit our top zone and I see any sort of rejection on the 15-minute, I'm taking a sell and my first target is 13,800. Yeah,
13,800. That's what I was thinking. Okay,
that's
cool.
the exact zone that I'm looking for. If I see if we can touch our zone and I see any sort of, because look, as we can see as previous price action, as soon as we hit this zone, as soon as we get a bearish candle, there is really no play. Even if we were to take this sell, for instance, let's say we take this sell, for instance, again, your stop's going to be above liquidity. We're not taking out liquidity, as we can see. We're still pushing to the downside. So that's the thing about indices. And as we can see with these candles here, we come up, we're getting towards our zone. Guess what? That huge bearish candle there. Again, we come up, we touch our zone, our huge bearish rejection candle, and this is where we're seeing the push back to the downside. So if we do see a rejection at this 14,050 level, any type of rejection, I'm hopping in sell, putting my stop above this liquidity zone and targeting 13,800. And so, yeah, there is our NAS bias. If anyone have any questions, y'all can just throw questions out there. Of course, you can stop me at any time and ask anything. Cool. All right, so next we're going to go to our Forex pairs. So
I don't care about anything else.
My main pairs that I'm going to be trading this week are EU, Gold, and GU. AU has been looking absolutely disgusting, and I just don't even want to trade it. Yeah, so AU, we have been playing this range again. I have this two bias perspective on AU. We could hit our zone and go up or hit our zone and go down, but as an overall perspective, I'm not trading AU this week just because of how market structure is looking. I really don't want to trade it. So moving on to EU. So EU, we have had some really good movements these past weeks. We are playing in between I don't know why it's doing that. So we are playing in between our liquidity zones throughout here. If I look at a higher perspective, we do see an overall downtrend. And so I am bearish on EU. After this break of structure, we did come up and hit 1.2400. As we can see to the right side, 1.2400 was completely mitigated. And then we saw this bearish momentum down, and now we are creating lower structure, as we can see here. So my bias is completely bearish on EU. I do, if we pull up our dollar index here,
I'm
we can see
really sick of your shit. With this game, I'm just really sick of your shit.
You excited on where it is?
Yes.
I'm not trying to be rude.
Cross-
Anybody's background noises, can you guys turn them off?
yeah, I have no idea what's happening. So, all right, so EU, if we do come over to EU, we can see, or the DXY again. So the DXY, we can see we have bottomed out completely. So we have this liquidity zone that we have held perfectly, and we had an order block that we have traded off of. Our fundamentals these past weeks have been trying to come out positive for the dollar. I don't know if you guys have been keeping up with news, but the US is talking about tapering, which is really good for the dollar, meaning that they're going to slow down the production of basically producing money. They're going to slow the production of money down, meaning that we can, in the upcoming weeks, see the dollar get back to our 92 zone, which is our key zone, to see a full-on reverse bullish movement. So we do see down in and throughout these zones. Again, we completely bottomed out. We took out our liquidity here, traded back into it, and then at the end of the week, we did see this heavy move up after the news settled in for Thursday and Friday for the US dollar. We did see this bullish move up. So as an overall, I do see the US dollar continuing to push up, especially with the tapering talks that we have been talking about, and with the overall ending US dollar news last week pushing up. So if we go back to EU, again, if we do see, if I'm predicting dollar to be bullish, then EU, of course, I predict to be bearish. We saw, just like we talked about right here, the break of structure going downwards. We saw the lower highs being created. We see price moving down. So what I see happening, we have a lot of imbalance in and throughout these areas on EU. There's an imbalance level there. There's also an imbalance level at this liquidity zone here. So what I see, obviously, with the market open, we do see this kind of bullish movement up. And again, this is the 4-hour perspective that we're looking at right now. We do see this kind of bullish movement up. What I can see happening for EU, these Sunday, Mondays, I do see maybe a push back up, maybe to 1.21600, or even just filling our imbalance here. But overall perspective, I am looking for sells basically all week on EU. And my main target is 1.20 even. And the reason why I am targeting that is because this is a key psychological level. So I know, if we hop back on our 4-hour really fast. So I know that we do have these liquidity zones in and throughout this area that we can see. So again, with the sells, you can take it and you can target equal lows if you want to. That will be my first target, is equal lows, and then just moving stops as structure goes down, because again, I am predicting that we do come and we bottom out at this 1.20 level down throughout here. But as a overall structure standpoint, I do see us maybe Tuesday, Wednesday-ish, maybe even Thursday, making our push to the downside. And since we are dropping into lower lows, 1.20 is going to be our main target before we do look to see where price is going to go. Again, we could trade off of these zones here. We could have reversals, but as an overall standpoint, with how news is and how we do see the US dollar becoming more bullish, I do see EU actually dropping into our zones. Let's see if we go to a 1 hour really fast. Yeah, so we have And again, we did break this price accumulation range, as you can see here, traded up through it and created an order block off of it that we completely mitigated with this price action here. So yeah, I definitely see us pushing down to that 1.20 level this week. Maybe even starting to push lower if the US dollar continues to be bullish, but my main target is there and I will be taking majority sells on BU this week. Moving on to gold. So gold is another pair, again, that has been moving pretty well in these past few weeks. As we did see over here on June 3rd was our original push up. So from June 3rd, we did move 1850 to 1900. So we've moved a 500 pip range on gold, and we are trading in and throughout these ranges now. So this is the 4-hour perspective. As we can see here, huge drop off. And if we go back to our DXY, again, the dollar index and gold are always negatively correlated. So if we see the DXY, we do see our bearish push again, like we said, which is why we do see gold dropping. So my overall perspective for gold is to actually drop. I can see us maybe, let's see how prices drop to a 1 hour really fast. So on a 1 hour perspective, so with gold dropping how it is, given that it is a commodity, I do see us retracing. So maybe Monday, Tuesday range again, because beginning of the week are prone for a lot of retracements, for a lot of fake outs. I can see us coming and retracing into maybe 1884, 1885 zones in and throughout this area before actually making a drop. But as an overall perspective, again, just as we said, I have the dollar being bullish, so I do have gold being bearish, and I will be looking for majority sells on gold this week. Moving on to GU. Up on a 4 hour. So GU, again, GU has been giving, I mean, although GU is, obviously we can see that we're ranging in between these two zones, but this is almost perfect for GU. Again, as we can see, the last week we did catch these two huge buys. We also caught a couple of sells on last Sunday, but majority we were looking for buys. So ranging pairs like GU, when GU does things like this is really good for us because again, we can just take liquidity and we can trade exactly how liquidity is going. In and throughout these zones, we're moving perfectly in and throughout these zones, as we can see, and we have held this for quite a long time. I do have the dollar again being bullish, so my bias for GU is bearish. We can see that we are starting to slow down with trading in this zone. We can see here, we didn't reach our liquidity zone. We again didn't reach our liquidity zone, and when we didn't reach it, we didn't just reverse from it. We created an order block here. We can take this scale down. Yep, we created a 1 hour order block there. We created another 1 hour order block here. So again, we are trading off of order blocks. So with this, with us not reaching our price action perspective of liquidity, which is where we were looking for it to obviously trade in and throughout, we do see that we are getting huge rejections, and our rejections are coming off of clear order blocks on a higher time frame. So what this is showing me is that we are starting to tone down and that GU is looking to start to become bearish, especially with this end of week move here, this end of week bearish move with how news affected everything. I am overall bearish on GU. So depending on how we do play out again, Monday, Tuesday, I do see us maybe trading into our zones here. So we have a huge imbalance area here on our 1 hour time frame. We also have imbalance. Let me go to a different time frame really fast. Let's look at 2 hour real quick. So we can see again, there's that imbalance level there. Here's another imbalance level up here. And again, all imbalance is just body to wick, whatever separation where price action did not come back to, that is what you're counting as your imbalance area. So here are my 2 points of interest for this week. Our point of interest here, we have our point of interest here. And again, we can see GU may become retracing into these zones, but I do see GU completely dropping off and maybe taking out 1.40 levels, given that that is a key psychological level. But since we are in this range, we do have to play it safe. So original targets will most likely be equal low areas here, equal lows right here. And then if we do see price action again continue to push down, then we can just move stops with our position. But like I said, once again, we are in an overall bearish standpoint when looking at GU for this week. So I will be majority taking sells. I might actually start to scale in once we get to this zone, just because I do see we have completely respected. We respected this order block with this order block. We respected this order block with this push down. I wouldn't necessarily classify this as an order block, but again, we do have this huge bearish candle after taking 50% of this order block out completely, showing this push down. So from these zones here, just for my first POI, I might start to scale in with little positions. And then if we do end up actually pushing up to our main targeted POI, then I will probably put my big position on this zone in and throughout here. And again, first target just being equal lows on both positions. And then second target, if we do see us coming down, looking to target zones in and throughout here at 1.4, like 1.40400, because we do see this low here. And then if we can break 1.40400, we're probably looking to come down to 1.40 even, because again, that's just a key psychological level on GU. And with the dollar news that we have been receiving, we do see a lot more bullish momentum in the dollar, meaning that of course GU correlated will eventually drop. And so yeah, there are the main pairs trading for this week. If y'all have any pairs that y'all want me to look at, y'all can just call them out and I can go and mark those up for y'all and look at where I'm looking for them to go this week.
I actually just had a quick question, really.
Yeah, what's up?
So like when you're figuring out like market structure and like little things like that, do you base it off of like the bigger time frames, like the hour and the 4 hour first,
Yes,
before
so,
you do anything else?
Yes, so 4 hour is probably like one of, I know people say daily a lot. I mean, you can look at the daily, but again, the daily is just huge candles, especially on like GU. Like this is extremely confusing just from my perspective. So I like the 4 hour a lot. Higher time frames are always going to hold better than lower time frames. So that's why, especially when looking at market structure, this huge bullish move here, these are 4 hour candles. So we know that price action is actually bullish rather than seeing that on a 5 minute time frame. So we do look at the 4 hour to start off with, again, just because market structure does hold better on a higher time frame.
Oh, all right, cool. Appreciate you.
Of course. Use 2 hour time frame. Yeah, so yeah, our 2 hour time frame is, we are holding structure really cleanly here. So I can see a push up into our imbalance areas before I drop off again. This should be a big week though. Looking at a news perspective, let's see. So tomorrow we have mild GDP news. We have mild odd news, not too much to worry about. Let's see, Tuesday we have, so Tuesday around this time, if you're in trades, I would be looking out, because again, we do see these core retails, which is big news for the US dollar, and that could show us, depending on how the DXY moves, that could be a big influence as to where these pairs are going to go. We're forecasting 0.4%. Let's see how So actual greater than forecasted. So again, if these numbers come out better than what is forecasted, then that's going to be good for the currency. If they come out less than what is forecasted, then obviously that's going to be bad for the currency. And then all of this is just minor news that's not really going to affect the markets much. Let's see, going into Wednesday. So Wednesday, again, another big day. If you're trading CAD, there's CPI reports coming in on Wednesday. There's also more USD news, so FOMCs. This is pretty important. Given that we do have heavy news on Tuesday, this should just push in the corrective area that our Tuesday news does give us. Because again, if we're not really going to see heavy USD news on Tuesday and then bad USD news on Wednesday, that's not really how most things work. And again, the same applies here, more hawkish than expected. So again, this number, we don't have anything forecasted yet, but if you look maybe Monday, Tuesday, we should have forecasted numbers here. And if our actual is better, then that's going to be good for the currency. If actual is worse, then that'll be bad for our currency. We have more CAD news. This is just speaking. This is going to be reacted off of whatever the CPI results are. NZD news. Depending on what you're trading against NZD, again, this news could be completely irrelevant. So like if you're trading NZD USD and we do have positive news here, this news isn't really going to affect much because again, this is just GDP reports. We have a little bit of odd news. So odd news. So this is, if you are trading AU or any odd pairs, I would look out for Wednesday because again, this is unemployment changes. So this is going to be a huge move for the odd, rather it be bullish or bearish. I have no idea yet, but again, look here, actual greater than forecasted once again. So if this number is greater than what we're forecasted, 30.5K, and that's going to be great for the currency. If it's less than, then of course that's going to be bad for the currency. Let's see, Thursday, if you trade CHF, there's monetary policy news. This monetary policy news and the press conference should cohere with each other. So again, you should see the relative news correlating with each other because they are around the same time. A little bit of Euro news. Again, this is just, I only look at heavy news because again, heavy news is what's going to move the markets. These reports here, that's just like turning on your news and seeing something happening. These aren't really going to affect much. Here's actually, if we see here, unemployment claims again. So with this USD news, given that it's orange, which is like mediocre news, it's really just going to be depending on how the previous USD news from Tuesday and Wednesday come out. And then we look at Friday. And then Friday again is good. We don't really have much news coming out on Friday. So those are kind of the main news reports coming out for this week. Tuesday is going to be probably our biggest day because again, Tuesday is our first wave of USD news, and this should set us up to see what we're going to do for the rest of the week. And again, the US dollar is probably one of the strongest currencies other than GBP. So this could affect most of the pairs that most of you guys probably trade. So yeah, we're all good. If you guys have any pairs, questions, anything like that, of course, you can just call that out.
Fam, I'm trying to get a re-entry point for gold because I'm actually mad. I actually took like all of my profits from gold and I'm absolutely upset. But it's all right though.
So let me see. So here's a huge liquidity area here and playing this zone. But in order, so to be honest, if we can even look at it from a 2-hour perspective. So this zone, although this is a liquidity zone, again, it's various price action here, but we are kind of starting to blow through it. So if you want to, you don't really have to worry about this liquidity zone if you don't want to look at it. So we can just look at full on imbalance levels. So from a 2-hour perspective, here is a huge imbalance level. So we could maybe see it coming up. And again, like I just said previously, 1885 is our real main target. So 1885 to like 1890 is our target for maybe the retracement to come back up with just waiting on whatever news happens on Tuesday. So tomorrow we can maybe see this bullish move up, just taking out price imbalances. And then this is where you can probably find your re-entry if you are looking. Because on an overall perspective, we are completely, we've broken 1, 2, 3 liquidity zones, and we're targeting our fourth one. So we are completely bearish when it comes to looking at gold for this week. Look at the 1 hour here. On the 1 hour, there is some price accumulation here. Again, this is just 3 hours worth of data, so we're not really worried about it too much. But again, price can come up, mitigating this price accumulation right here, just taking out highs here before we do see us actually dropping off into our main zones that we were looking at down in here, and even taking out 50% of this order block here, which would be really our main target before we could readjust our bias. Actually, I'm gonna go ahead and set an alert now for the top of here.
Oh, and I also have one more question for you.
That's good.
So when you, I know I asked this, I think on Friday, but you said like when you enter them, are you gonna send them like in the active trades like you said
Yeah,
you would
yeah.
you enter the sell and stuff like that?
So I'll send them in both the active trade and the our general chat. Just so that if y'all are looking at either one, y'all can see them. But I'm just gonna start adding everyone so that y'all all get the notification.
Oh, okay. All right, bet.
1833 594. Set that alert up now. So with this alert set, again, if we do break this, this is where I will start to look for what price action wants to do. If we start seeing some momentum candles pushing to the downside, then I'll probably end up just hopping in on a sell here. And if we do see, again, we could push up to where our main imbalance area is on a higher time frame before actually seeing the drop off. And that main imbalance area, again, happens to be a main liquidity zone that we have held multiple times in previous price action. Yep, so he is doing a little bit again. We are targeting this 1.20 level. We're just kind of looking for an entry and just seeing what price action is going to do between Sunday and Monday. Because again, those are, I mean, I wouldn't necessarily call them fake out days, because again, you can trade on any day as long as your analysis is lined up to what the market is doing. But I would say, I mean, trading Sundays and Mondays are kind of hard just because it's the beginning of the week and price can go up, down, just moving in and throughout the range. So yeah, those are the main markups and main pairs going into this week.
Do you trade any cryptos, or do you just relax for the week?
No, I kind of just, I mean, I look at them, seeing like those, like the main one I kind of look at, just looking for another entry. I'm waiting for this huge, I know it's coming. I know the bull move is coming. It's just a matter of when. But for the most part, now I'm not really looking at cryptos in and throughout the week. So as of now, we're kind of just waiting for what price action is going to present us. And then from there, we can kind of just react and have a great week, to be honest.
Big facts. Hopefully I could pass this challenge, and hopefully I could pass it phase one. Hopefully I want to do it I want to do it by the end of the week for real. But
Oh, you should be perfectly fine. This week, especially with us being second week after NFP or um 2 weeks after NFPs. But I mean, given that we are moving towards the middle of the month, we should see some big moves, especially with all the US dollar news that's coming out this week. We have three, four sets of heavy news coming out. So we should see a big move in almost all of the pairs.
see, I low key hate taking a challenge. The only reason why I even hate taking it is because like it's such a big adjustment to like using like lots, like 2 lots, like 5 lots up to that, and then completely changing it to like 20 cents, 30 cents, making sure that my risk management is even key. And that's like been fucking me up lately.
Making sure we're not blowing accounts.
Yeah, dead ass. Cause like I'm gonna be pissed. Like, cause I know like I took like a demo version for like the FTMO, and I was like, it's all right. But like now obviously like doing the funding talent one and like using the low lots, I've been like, all right, cool. It kind of like brought me back down to earth. It's all right,
rather than using
like,
huge lot sizes and trying to flip them accounts.
yeah, facts. Cause I laugh about it. Cause I'll be seeing like on Instagram, like I'll see like these random pages, and then I'll see them. They're like, yeah, we're up like 500,000 ZAR, and I'm like, what does that like? What? Yeah, like what does that even mean?
Pivot point here, we have a pivot point here as well. So we have all our pivot points set up on the key levels. So yeah, we're really just waiting for price action to move for us. And going into this week, we can just see where price goes and pretty much react off of that. But this should be a really good week. Downside. And even now, as we can see again, we're getting these huge bullish candles just with US dollar. So I expect us to maybe take out zones of 90, 9,900, maybe pushing 91 before a little retracement, and then maybe even taking out 92 by this week. 92 is our main level for the DXY that we're looking to break. Once we break 92, we know that we're back into our full-on uptrend, and from there, it's really about just reacting to how the pairs will move. But the main thing I can say is this: having side by side with the DXY and your pair help a lot, because usually what the DXY is doing relates to most of the pairs that we trade. Unless you're trading like CHF, things like that, most of all of the USD pairs, I would try and look for your confluences, especially off the DXY, just to react to.
That's what I noticed off of EU.
Why not EU?
Yeah. Every time I trade it, like in the morning, I'll be like if I notice like a big move up or down, I'll just look at the DXY and I'll just be like, what is? Wow, interesting.
Exactly, and that's usually what I do. I just go 50-50, and then just have DXY 15-minute usually pulled up on one, and then just have the pair that I'm trading on the other. Because again, whatever movement's happening over here, we literally can just react and see how the market is reacting. And it's a dollar index. So what is it? It's going to tell you exactly what's happening. Bullish move up. Guess what? EU, we're seeing this bearish move. Same thing goes for gold. Bullish move up, they're negatively correlated, as we can see perfectly, the exact opposite of what's happening on the DXY. So yeah, that pretty much wraps up everything for today. If you guys have any questions, of course you can ask, but other than that, we're pretty much good.
Shit, well, I appreciate you, bro, for sure.
Of course. And yeah, this week should be a good week. We're gonna attack them coming tomorrow. We should be on the charts about like New York crossover. So same time as normal, but we should be just looking to absolutely destroy the markets this week. Things one more time. It's 30 holding. That is again approaching our zone. Same thing. Hold, same thing, and GU, same thing. So yep, all good for pre-markups of the week. Now we really just gotta wait for market analysis to show itself and show what it really wants to do and completely react off of that. But I hope you guys learned a lot. Again, if you have any questions, just drop them into the Discord. We're all here to help each other get better. So that's about it.